Hi, my name is Jonathan Roth. I'm joined by Dan Wilton. He is a director and the CEO of First Mining Gold. Dan, thank you so much for joining me.
Well, thanks for having me.
You are working on one of Canada's largest gold projects right now,
Yep.
and obviously in a very exciting time for gold. But to start out with, your company is very interesting because you, I think, have made a strategic decision that you will not have any projects outside of North America. And I think within this current gold environment, that's very unique. Why don't you go into why you made that decision?
Yeah, that was originally kind of the mandate when Keith Neumeyer, who's our board chair, and a few like-minded individuals set up the company in 2015. They, at the time, gold was, below $1,100 an ounce, and, there were all these projects that had actually had a lot of good work done on them, but after 4 or 5 years of bear market from 2011 to 2015, a lot of companies had given up on. So they kind of started with a big list of good gold projects, kind of million-ounce resource in places you could develop mines. And, one of their criteria was it has to be in good jurisdictions. And so they were looking broadly across North America, but it turns out that most of what they bought were projects in Canada because they were available at the time. And some of these projects, you can't find projects like these today. So and we've been very thankful for some of that foresight as I joined the company beginning of 2019, and it was one of the things that really attracted me in this environment, particularly, exacerbated by the last few months where, you're trying to figure out what the trajectory of COVID-19 cases are in countries in other jurisdictions, other parts of the world. You can really prevent you from getting to work on your projects very quickly. Where we've been in northwestern Ontario mostly, where most of our work's going on at Springpole, we have been able to work the whole time through. So yeah, it really exacerbates, it makes us very thankful for why they made that choice back then.
Well, you just mentioned that you joined the company in 2019, and what I found really interesting is you've worked around the mining sector for a long time, been involved in a lot of M&A and a lot of big money, frankly, in the business. But you finally decided to actually jump into the business and become a gold miner yourself. And this is actually after working in global financial institutions and General Electric, and you've got a really, really interesting resume.
Yeah, thanks.
Why did you make that jump?
Well, listen, I had been working as a partner in a mining-focused private equity fund for about 5 years, looking at later stage development assets. That was kind of our core focus. And as it turns out, had looked at a number of the projects that First Mining ended up buying before First Mining bought them. So we looked at Springpole in 2013. We looked at Goldland a couple of times. We knew the people who'd done a bunch of the development work on Pickle Crow. We'd looked at Cameron, so Hope Brook we knew. So really the core of our portfolio, I'd either done advisory work with in my investment banking career, or had looked at, from the perspective of a principal investor. And so when I came out of the fund and was kind of looking for what's next, someone said, "Oh, you should have a look at this portfolio. It's really interesting." And I hadn't paid much attention to the company as it was put together. It was a market darling, but very, very, very much promoted as a land bank. And what I had been thinking in my mind was, you got to find projects with more kind of fundamental value. So I didn't really pay a lot of attention to it. I thought it was kind of a buy and hold strategy. But it turns out they'd been doing a bunch of really important work, de-risking the resource at Goldland by taking Springpole through a PEA. We ended up doing a second PEA, but a lot of real fundamental de-risking work on these projects. And I got to understand that. It just came to me that, this is really a unique portfolio of assets. And if they'd embarked on the permitting process at Springpole in 2018, and you could just really see the path forward, but yet the market was giving these projects very little value. So I kind of saw this as a huge disconnect, and so I actually ultimately just cold called Keith Neumeyer. I didn't know him. I'd met him once or twice, but I cold called him and said, "Keith, I think what you have is one of the best portfolios of undeveloped gold projects in the world, and you need someone to hey, help move it forward as a CEO and the rest of that. But I think you need someone to help kind of manage this portfolio. And Keith quite rightly rolled his eyes and said, what do you know about being a CEO? And I said, well, not much. I've worked with a lot of great CEOs. Hopefully I've learned a little bit, by osmosis from there. But it really was the unique opportunity that we had here. And I thought an ability to, through some reasonable transactions, finding partners, being able to surface some value in the portfolio. So we really started on that at the beginning of this year. And you look at where we are today, having gone from our non-spring pole projects really being valued at zero inside the portfolio, today you can kind of point to and touch and feel almost $200 million of value there. So that's been reflected to a degree in our share price, but it still leaves us with spring pole, this hugely strategic asset sitting at a really attractive value, which you still think there's a lot of runway from here as we take risk out of this project. So it's exciting.
So I think investors need to understand spring pole, if it was in production today, would be the third largest gold mine in Canada.
The third, behind Detour and Malartic.
Right. So, I mean, this is a massive project, let alone one that you're getting your feet wet jumping in. I mean, if there was ever an opportunity, this is the one.
Yeah.
Unpack what spring pole is and what you see as the timeline moving forward for investors.
Yeah, so spring pole is a large open pit development project. It's about a 5 million ounce project with an average grade a little bit in excess of 1 gram. And the game plan is an open pit mine and mill. And production profile that looks like for the first 9 years of the project, as we scoped in our PEA, in excess of 400,000 ounces a year, right? So this is sizable enough to be strategic and meaningful to the largest gold companies in the world. Now, the development plan at Spring Pole, the deposit sits under the bay of a lake. And so the development plan is building a couple of small coffer dams and then dewatering that part of the lake, open pit mine. At the end of the mine life, you breach the coffer dams, the open pit, and the lake fills back up. And net, you end up with a very, very low net footprint operation. And some of the work we're doing on the PFS right now, so we're doing a pre-feasibility study. It'll be done early next year. And we're in the environmental assessment process and aim to have our environmental impact statement submitted probably by the middle of next year. But with all of that, that's kind of driving the timeframes moving forward. But we're doing a lot of the real science and understanding and de-risking of this project as we've gone through understanding things like hydrogeology and hydrology, how water moves around the site, metallurgy. We've fundamentally changed an understanding of the metallurgy. And just with all of the 8 years of environmental baseline work that's been done at the project, we have a really, really good understanding and a really firm belief that we're going to be able to develop this project with in an environmentally responsible fashion with no long-term negative impacts for the environment.
So what's been the reaction of the community, and what about government support in terms of what you're doing? You're in Ontario.
We're in Ontario, and this part of northwestern Ontario, well, all of Ontario, I would tell you, are great places to develop and permit projects. So the province of Ontario has permitted 4 big open pit projects in the last 4 years. Magino, which Argonauts just raised the money to start building. Côté, which everyone believes is pretty soon going to start being built. Hammond Reef, which is a big project that Agnico has, sort of down closer to the U.S. border. And the Hard Rock or Greenstone project that Centerra and Premier have. All of those big open pits, lots of water issues that you have to deal with because it's Ontario. It's the Canadian Shield. There's, lakes everywhere. So we think, coming in, drafting in behind those 4 development projects, there's not a lot that's going to be unique about Spring Pole through the permitting process. So we got great support from our regulators, great support from our Indigenous communities. We need to. We've been in active consultation since 2018, and continue to move the dialogue forward. But so far we've had great cooperation and support from our communities, and we still need to demonstrate to them and to the regulators that we can develop the mine responsibly and not have any adverse impact. But no, so far, this is a project of the size and scale that could be really meaningful for generations of people in those
Right.
communities.
Right. Well, and I think it's instructive that the Canadian government is, gold mines are an essential service.
Yeah.
So I think you're definitely moving in the right direction then. So funding the project, you have a really unique method of doing this with First Majestic. Unpack that whole story for us.
Yeah, so we'd been talking with a number of different royalty and streaming companies for about a year because we were quite interested. Listen, when you're trading at a value that we were earlier in the year, kind of 0.05 to 0.1 times the net asset value of your projects, and that's particularly just of Springpole, let alone the others, which were kind of sitting there for free. Continuing to fund the development program and your G&A costs by continually issuing equity starts raising a lot of concerns about dilution. And we heard that from all of our shareholders, just want to understand what the longer term funding impact is. And so as part of that, we've been looking at non-equity dilution alternatives. And as we went through that process, one of the things that became clear, we really wanted to focus on if there was an opportunity, particularly to leverage the silver byproduct in Springpole. So a lot of people don't even appreciate that Springpole, the revenues, depending on your metal price assumptions, 5 to 7% of the total revenue is silver, but it ends up being pretty meaningful ounces. And so as we were kind of going through a number of those discussions, I kind of raised it with Keith Neumeyer and said, First Majestic understands this project probably better than anyone because we used to share offices with them. A bunch of the Majestic technical team has really helped us out along the way, given us lots of guidance and advice. And so I kind of said to Keith, you want to buy some forward silver? And lo and behold, he kind of thought that wasn't such a bad idea. So we ended up structuring something that I think really reflects the understanding that they have of the project, where they're going to buy 50% of the silver as it's produced with an ongoing payment of 33% of the silver price, capped at $7.50 an ounce. And it's a life of mine purchase, but importantly, we have an ability up to the point where we start producing that we can buy half of it back, sort of for the initial amount. And that in total, it's staged funding, so $10 million up front, which we closed a couple weeks ago. It's another 7.5 when we complete our pre-feasibility study, and another 5 when we receive our federal or provincial environmental approvals. So staged along that development path, but this gives us the capital for the runway to be able to get to that critical de-risking milestone of the environmental approvals, we believe, without any further equity dilution. So it's just hugely strategic to us. And so, yeah, it comes at the cost of some asset dilution, but relative to the equity dilution that we would have to take, it made it a pretty easy choice for us. And with a strategic partner, First Majestic has invested millions and millions of dollars in processing technology and metallurgical technology, to have bring some of their great operating expertise and that mindset into the development process as we scope the projects. It's very exciting. So we're really looking forward to that.
Yeah. When I came across that aspect, I thought it was very creative.
Yeah, thank you.
In terms of solving a problem that clearly needed solving. So, so look, you're in the development phase.
Yep.
From an investor standpoint, given everything that's going on,
Yeah.
what advantage do you have, say, over a producer looking at it from that investor's standpoint?
Listen, from an investor standpoint, the advantage is valuation right now. You can go and buy multi-asset producing gold companies at 2 times net asset value today. And I think a number of them are appropriately priced for an expected increase in gold price. They have direct leverage to that through their ongoing production. So it's a different risk reward profile. But if you're holding multi-asset producers and you've already sort of doubled or tripled based on the run up in the gold price, it might just be worth asking, how could I take some of that profit and look a little bit earlier in the development curve to find things that I can buy at 0.1 and 0.2 times net asset value? Because ultimately, from my corporate finance days, from the private equity background, we sold a lot of companies in 2010 and 2011, including a lot of, big low-grade development projects, sort of right pre-construction. Some of them far earlier than that, but those tended to trade at, call it like $100 an ounce was kind of the metric, and they would trade up to 0.5 to 0.7 times their net asset value, sort of when you got them permitted, and then they'd get bought by a strategic acquirer at 1 times their net asset value, because the strategic acquirer is trading at 2 times their net asset value. So a accretive deal to them gives them pipeline. It's the way that much of the mining sector has worked over a number of different cycles. So I think when you look at those values and cast that in your mind, where with Springpole, even in our PEA, at $1,500 gold, it was a 1.2 billion US after-tax NPV, 1.7 billion pre-tax. So you start doing some of that math based on our share count, we're still, you've got pretty clear runway on the value of Springpole alone to see you up to, market caps of $1 billion plus.
Right.
So lots of runway left to go. And then I think with some of the other changes we made in the portfolio, being able to surface some of the value, move some of these things a little bit closer to value realization, but still participate in the upside on things like Gold Run and Goliath, on things like Pickle Crow. Well, we're now sitting with, what's approaching $200 million in, cash marketable securities and project interests. Right? And that fundamentally changes the risk profile of this investment, because you don't have that same concern about how you're going to hold it, right? Which was always the question that we received. So, no, it's a pretty exciting place to be in here. For those who lived through the last cycle and remember kind of what a Detour did. They remember what an Osisko did. Those were projects that people shook their head at too.
Yeah.
And today they're, the 2 largest producing gold mines in Canada.
Yeah.
So, it's exciting. Lots of runway for us yet here.
Well, your stock is the highest it's been in the last 2 years, but
True.
It's clear that you have a lot of runway left to go, which I think is obviously very exciting from an investor's standpoint. Lastly, in kind of my last question for you, how do you as a CEO look at all the assets? You have 12 gold projects, you have another project on the side as well, but you have this huge, like a 3rd largest gold project in Canada. How do you kind of sort out, where to go from here? Because investors are kind of looking at this and saying, how long is it going to be before you're in production? And frankly, how many multiples, is this a 5-bag or a 10-bag, or what is this going to turn into?
Yeah.
How do you handle that?
So, listen, I think handle it the same way we've handled it over the last 18 months, which is having a real focus on the fundamental value of these assets. And that's the perspective that I'd always brought as an investor, perspective that I'd always, brought as a corporate finance professional before that. You really have to focus on the fundamental value and focus on the scarcity value of real mineral projects, because they're really hard to find. We're not really finding many more of them. Exploration is hugely expensive. And most importantly, if you think about, what can be built between now and 2030, if you're just finding it now, it's not going to produce before 2030, right? In a current world, by the time you go through permitting and delineation and, spend $100 an ounce drilling out the deposits, which usually you kind of have to do, it makes it a really exciting time here. So for us, we got to keep focused on doing the right things, advancing Springpole. We really believe in that fundamental value at the end. We're talking about some of the numbers, in our PEA, take it through PFS, technically de-risk it, make sure that we can demonstrate that we have, the social license to develop it, that we have relationships with our communities to continue to move the projects forward. And I think that value just accretes over time, as it has in most other development projects. But we're right now very focused on that milestone that is environmental assessment approvals in 2023. And that then opens up a world of other alternatives. Some of those alternatives will open up along the way, but at that point, then we can conclusively demonstrate to people we have the license to be able to develop this project. So and then you kind of address that, how that gets funded and the big construction capital and all the rest of that at that time, but you're doing that from a position of strength. And I think with our balance sheet and kind of the change of the projects and the ownership that we have, I think that's going to give us a lot of flexibility in whether it's finding a partner, whether it's, having a development team. All those are, those are important discussions to have, but we're going to have them in the future. Right now, we got to stay focused on what we can do. And still, probably some other optimization of the other assets in the portfolio. We've got some other great projects that, we never get to talk about below Springpole and Gold Bond.
Right.
But yeah, still lots of work left to do and lots of value that we can continue to drive into this, particularly in an accelerating gold price environment as well.
Well, Dan, I really appreciate your time.
Well, thanks so much.
I wish you all the best as you move forward with this project.
Well, thanks. No, I really appreciate it.